Hey everyone, my name is Eric, and this is how I'm going to force Apple to pay for a brand new iPhone every single year. Not just any iPhone, the most expensive one, the iPhone 13 to whatever they decide to name it in the future, Pro Max. Now, according to Apple's own website, a 512 gigabyte iPhone 13 Pro Max in the Alpine green color, but hey, it's a nice color, right? Is about $1,300 plus tax. Now, if we do some quick math here, carry the 2 plus 5 minus 3, it's gonna be about $1,500 out of pocket for a brand new iPhone 13 Pro Max every single year. I will need to force Apple to pay me $1,500 every single year so that I can go and use their money to buy an iPhone brand new every single year for free. So how do I do it? How do you do that? Welcome to the world of dividend stocks. So what are dividend stocks? A dividend stock, or rather a company listed on the New York Stock Exchange that gives dividends, are companies that basically give a portion of their profits to their shareholders. Meaning because their business is doing so well, they're actually going like, hey, because you invested in our company, we would like to thank you by giving a portion of our profits to you. And because of that, that's called passive income. Now I get it. When you hear dividend stocks, it sounds kind of slow. Generally speaking, a lot of dividend stocks give anywhere between 0.1% in dividend yields back, like Apple, or something like Altria with 6.88%. But that's kind of the point of dividend stocks. Companies are giving a portion of their profits so that you use that portion of profits to kind of reinvest in their company. The whole term in this case is called compounding. Like I said previously, the ideal method for dividend stocks is for dividend stocks like Apple to give a share of their profits to you, and then for you to reinvest that money back into the company so that they give you more money in the future to reinvest back into their company, and the cycle continues until you have what is a small snowball at first into a giant avalanche when you're like 20 or 30 years down the line. Clearly the snowball is going to be a little small at first, but like any long-term goal, it's not about the destination, but it's about the journey. Dividend stocks can also kind of be compared to my YouTube channel. You're not going to see a lot of growth at the beginning, but as you keep working on it, producing better and better content, the material will go up, people will start subscribing, and there'll kind of be like an exponential pattern to your growth. So make sure to subscribe. And that's what basically dividend stocks are. Yeah, but that's all fun and stuff. So, how do I force Apple to pay me $1,500 in dividends or money every single year? Simple, by investing in them. But let's start small. Let's say hypothetically, I want to drink a Coke can every single day for the rest of my life. If I do a quick Google search, you can find a 35 pack of Coke at Costco's for 43 cents per can. Now doing some quick math times 365 days a year, it's about $156 every single year that I will need to force Coke to pay me so that I can go buy a Coke can every single day for free. Now, Coca-Cola actually pays the shareholders a dividend, and they've been doing so year after year. The current dividend is about 2.7%. So doing some quick math, because I'm gigabrained, $156 divided by 2.7% gives me roughly about $5,687 that I need to invest into Coca-Cola to force them to pay me for a can of Coke for the rest of my life. And when you really think about it, that's not that hard to do. $5,697, not too bad when you think about the grand scheme of things and how much you actually have to invest in the stock market. Now let's go with another example. Suppose you're a Starbucks girl and you need a Starbucks drink every single day for the rest of your life. You're one of those girls that get 6 pumps of raspberry with a strawberry acai blend with lemonade, topped with passion tea. I know I've been on TikTok a little bit trying to figure out the TikTok game, and that's what actually popped up on my For You page. It's gonna cost you about $6 every day for the rest of your life. At $6 times 365, you'll need about $2,190 that Starbucks needs to pay you so that you can get a free Starbucks drink for the rest of your life every single day. So doing the math again, in order to force Starbucks to pay you $2,190 every single year, you'll need about $91,000 invested in Starbucks for them to do that. Unlike Coke, it's going to be a little harder for you to reach this goal, but other than the fact that you're getting dividend yields from Starbucks every single year, you're actually joining the ride of their stock throughout the year as well. After all, stocks only go up, right? Now, I understand the general concern. When you think about dividend stocks, they're kind of like old school companies that don't really have big fluctuations or downturns in the market. But if you look at any long-term graph of what I call dividend aristocrats, you'll actually notice something different. And they're called dividend aristocrats because they give out a dividend year after year for 10s, 20s, 30s plus years. When you look at these charts, they're actually generally doubling in value every couple years, or like older giants like 3M that actually has doubled or tripled since 2008. Now granted, these aren't your meme stocks like GameStop or AMC that could instantly cause you to be a millionaire overnight. But in those types of investments, there's always going to be more losers than winners. So when you invest in that type of way, it's better to just invest that money into the lottery. Your chances are about the same. What these types of stocks do actually provide is a relatively safe safety net that actually provide a different type of passive income. After all, according to the IRS, 65% of millionaires have at least 3 streams of income. And plus, there's other ways to earn money from these stocks than to just let them sit here and collect dividends for you. You can also do what is called option trading, which is, generally speaking, dividend stocks don't actually fluctuate up and down that often, so it's perfect for something that I like to call the wheel strategy, which is something I actually personally do myself. And if you'd actually like me to explain what the wheel strategy is, which is actually one of my most favorite option trading strategies out there, leave a flex emoji in the comments down below to let me know. Okay, so moving on to the question that was the title of this video. How do I force Apple to personally pay me $1,500 every single year so that I can buy a brand new iPhone every single year for free? Simple, let's just do the math that we've been doing previously. So $1,500 that we need from Apple divided by their dividend yield gives us roughly about just shy of $300,000 that we need to invest in Apple in order for them to do that. Which ironically isn't too bad considering how much of a juggernaut the Apple company is. It's a $2 trillion company, for crying out loud. That's also according to their stock charts has actually tripled in the last 2 years. That means technically you only needed to invest about $100,000 in March of 2020 during the illness to earn $1,500 in passive income year after year. And I'd also like to point out that Apple has one of the lowest dividend yields out there. I mean, if you take a look at the other dividend aristocrats, most of them pay between 2% to 3% year after year. And these are pretty famous companies as well. You have Walmart for 49 consecutive years at 1.6% dividend yield, Cisco, which ships food across the United States, at 42 years and a 2.3% dividend yield, and ExxonMobil, which is gas, with 38 years at 4.3%. And the list goes on and on. So it's not just passive income that you're getting from these companies as well. You're also generally going to get reliable returns on these companies just because they're great companies. This is a slower method to earning money, I'll give you that. But the risk is also a lot lower than any of the other options. And technically speaking, this type of investment is actually kind of recession proof as well. I mean, a lot of these companies still paid dividends throughout any of the recessions that we've had in previous years. The illness crash of 2020 still paid dividends. The 2008 housing market crash still paid dividends, and even the dot-com bubble crash in the early 2000s still paid dividends. Alright, so let's roll over to the final question of this video. Could you actually reasonably live off dividends alone? And the answer is yes, although it'll actually take a lot more money to do so. So let's take a look at 3M. They have a 3.7% dividend yield. In order to live on, let's say, $40,000 a year, I know I live in North Carolina. The cost of living here is a lot lower than cities like New York or Los Angeles, but for us, $40,000 is enough. But anyways, according to the calculation, at $40,000 a year divided by 3.7% dividend yield, I'll actually need around $1 million in order to get that number. Which I'd like to point out isn't $1 million from just my own personal pocket, but also from 3M's personal pocket, because the ideal dividend stock strategy is to reinvest all the money that you get from them back into the company themselves. Other dividend aristocrats will actually require less money. For example, Chevron and ExxonMobil only require about $975,000 because their dividend yield is above 4%. Again, like I previously said, you won't necessarily be investing a total of $975,000 because when you get a dividend from these companies year after year, you're supposed to be reinvesting it back into the company. So your total investment in these companies will generally be speaking less than $975,000. All right, so coming to the end of this video, I hope I gave you a glimpse of just how powerful dividend stocks are. They are fundamentally sound, as well as a great way to invest in the stock market while making a little money on the side. I hope this video was both informative and entertaining to watch. If you like this style of content and hope that I make this style of content in the future, please consider leaving a like, ringing that notification bell, subscribing, and if you want me to explain what the wheel strategy is, one of my most favorite option trading strategies out there, hit the flex emoji in the comments below to let me know. And with that, thank you for watching. Stay safe out there, guys. Peace.